What's up, YouTube? Welcome to another episode of Get Technical. I'm your host, Neil Hamilton. With me, as always, is producer AB, also known as Aaron Bree, also known as Mary Duck Mary of the Shire. What is up, Bio Noob? Shelly Uwu. What do I got up on the screen? Hey guys, quick little technical. Hey Neil, quick technical query. How long and at what temperature should I cook a 4.5 ham for? 4.5 pound ham. Asking for a friend. Cheers. Don't cook it. Eat it as is. Just a reminder: the show is for educational and entertainment purposes only.
I thought we learned our lesson with the raw chicken, Neil. Or the medium rare chicken.
Yeah, lesson was good. What?
Yeah.
If you guys want to lose some weight real quick, go to a restaurant. Nah, don't do it at a restaurant because they don't get it. Do it at home. Get a raw chicken breast. Lick it. Check 2 days later if you haven't lost any weight. Get the same chicken breast. Lick it again. Yeah, chicken sushi. Fast track to just shaving off those pounds. Guys, give me a guess. What stock do you think I'm looking at right now on my chart before I pull it up?
Chevron.
T. All right, man. Thank you. We got PT. Wait. Does the title have live Bitcoin or Bitcoin trading live or whatever?
I think so. Maybe.
Okay. Then I have to switch.
No, it has stock market live.
They switched it on me, dude. We need to do Bitcoin market live or Bitcoin trading live or whatever, so we can hack the YouTube and get all the Bitcoin frogs to come watch us.
I know.
Those sweet precious views.
I thought Spencer switched them to all of the Bitcoin ones where applicable.
Yeah.
It's NVDA, Apple price targets.
Got some good ones here. SMBR, SoFi, and of course NURO. I'm curious. I didn't watch NURO yesterday. I've been busy. Oh, geez, Louise. All right, give me a 1 in chat if you got in on NeuroMetrix. Let me know if you entered yesterday. Ticker NURO. We're not even opening charts yet. Chase. Naked. Good job, Will. Good job, Will.
I don't even think I've seen the stock that you were looking at guessed in the chat yet.
Yep, well, I already changed it. I opened NeuroMetrix. Yeah, not too much to... Well, actually, hold on. Let's see. Let's go to the monthly on NeuroMetrix. The NeuroMetrix could totally run some more. Chances are it's a risky bet. But you can see, where did it peak out at? All right, so that wasn't based on a monthly level. Let's see, where did we peak out at? Yeah, look at that. Support.
I mean, it's up only 152% today.
Yeah, it's not even worth looking at. So support here. I got fruit flies, people. My place is clean. I don't know what it is. Maybe it's because I went away for a week and left something in the sink. We got support here, serving as resistance here. NURO, NeuroMetrix, Inc., Health Technology, Healthcare system engages in research, development, and trade of medical equipment and consumables. All right, all right. Technical traders in the chat. Oh, it could be the dead plant. Okay, I gotta throw that thing out. Today it happens. Thanks, Chris. Best decision you ever made. Guys, give me a 1 in chat if you think NURO is going to break out past this resistance this week, or if it's going to have a little consolidation or sell-off. Give me a 2. 1, it breaks out up. 1, you're long, NURO. 2, you're short as of this moment for swing trading. I'm not talking about investing, folks. I'm talking about what's happening right now. So we got short, short, short. Shay is short. Hertz Scrambler short. Noob is long.
Shut up, Noob.
Mr. A cowboy in the chat. Born to be Free is a 2. Hugo with the short. Tubby Ninja Elite is short. Happy Muhammad is short. Dev long. So it looks like we're net short on NURO as for an entry right now. Reasons why. Drop your reasons why. If you're watching the recording of this video, let me know why in the comments. And if you're in chat, let me know why. Chris Wood coming in with the technicals right now. NURO, he sees a bull flag on NURO. I'm gonna go down to an hour and see if I can see what you are talking about, my friend. Sure. I would this is looking more like a pennant than a flag. Right? So you're getting lower highs and higher lows. So you want to see 15 minutes? Who uses a 15 minute? You guys are weirdos. So here's 2 things to keep in mind. When you're coming out of a broad base, first gap is free, second gap comes at a cost. Remember this, guys. That second gap is usually your exhaustion gap. But I'll draw the pennant anyway. I'll play along. So I'm gonna draw out who is our okay. So Chris said bull flag. It's definitely a pennant, but I mean these things they're all the same stuff. You know, it's all the same stuff. Let's see if that lines up. Yeah, it lines up with our resistance back there. At any rate, the reason it's not a flag is because the upper resistance and the lower support are not the same price level getting hit over and over. It's doing this. So we've got a pennant. And again, I'm looking at this. You all know I'm looking at this action. This could be the stock in the market that just keeps going, though. It really could be. So let's run a couple tests here. I feel like I'm at a modern day college party. It is holding this support. If you're looking for the pennant on the 15-minute, you're looking for that breakout above the upper line of resistance, and then you're, of course, targeting previous resistance. That's your immediate target. If you're going aggressive like my man Chris Wood, you're going to use the measured move, which is the swing high less the swing low added to that breakout point. So, you know, maybe something around here that would get you a little bit higher than that previous high. Is that like the 15-week high? I don't know. But we're looking at the 15 minutes, and you got to remember, from failed moves come fast moves. So if you're watching this on the 15-minute chart and you're trying to trade it, be ready with a hard stop loss. All right, especially in this market right now. Looks like the cryptos are doing all right. I'll have to check on that later.
Yeah, Bitcoin is up like 7% over the last 24 hours.
Yeah, nice bounce. So that's NURO. Just keep an eye on it. If it gets your breakout, go for it, buddy. Go for it. Not a lot of overhead supply right here. And then comparing that, I don't want to do a 15-minute all the way across time. I'm going to do it daily. I mean, it is a broad base. Usually with stocks like this, I don't know, it could be like MVIS, but you get a couple like big spikes like kind of in it before it starts getting into a real rounding bottom. However, you want to keep in mind this is in the healthcare sector, so lots of binary events. I didn't look at the Qs yet. You guys want to look at the Qs? By the Qs, we mean how are big tech companies doing? One way to put it. This is pretty much what I said yesterday. Pretty much what I expected to happen, which is we're going to continue this bounce, and then we're going to look for resistance around this red candle that we have. This is the daily. This red candle that we have on the 7th of July. That's going to be your price target. Ain't nothing wrong with going a little bit long, but look at this is why we're stopped out here. We got a bunch of folks that are breaking even right here. They were holding the bag and they're like, all right, I'm going to get out as soon as this thing gets back up to this price. 359, 340, or I'm sorry, 359, 360. And then they sold, and that drove this thing back down. That's just how that works. But in terms of the price structure, we are looking at what could be the early days of a, let me know in the chat, what structure is starting to form.
Let us know in the chat.
Let us know your thoughts in the chat. And while you're doing it, throw a like. It really helps us with the algorithm.
And hit the subscribe button.
Why not?
You're there already.
Marco, yes. Oh, AHT pop today. I wasn't even watching. Yeah, so you guys, so we got Vio Noob with the Eesh, and we got Marco with the H and S, Scott with the HS, Tubby Ninja Elite with the Head and Shoulders, Tay Lisa Shipper, Head and Shoulders. That's right. A pattern is not a pattern really until it actually goes past its final resistance point. It's just something to be watching for because everyone else is watching it, so you should be too. So we shall see. A break above. If we get new all-time highs on the Qs, very bullish. Very bullish. If we get rejected at this level, which is about 363, you can go a little bit lower, but I'm thinking if we get rejected at 363 or lower and start going in the other direction, put your bear hat on. And that's just how it is. That is just how it is. So very important levels to watch are... I'll try this feature, see if this works. Boom. And boom. These are your levels to watch. We're trading within this range. And it's looking toppy. Sloppy toppy. So yeah. Watch for that. If we break above this little control point on the shelf, that you can trade within this pattern for sure. This is more from an investment perspective and overall market strength perspective that I've been speaking about now. But yeah, if we break above 359 here, let me throw a thing on that. 359. If we break above this level tomorrow, you can target this upper line of resistance, which you really should base on this red candle back from the 7th of July. And that can be a nice little scalp. It can be a little options trade. Yeah. What? Okay, it's not even... So normally chat always talking that ish. Always talking that shit. But then when I see someone call me out for not wearing my daily outfit, which is a black t-shirt, black shorts only every day, call me out for wearing one of these shirts. It's one of my own. It's one of my own. It's Aaron Thomas. I know that name. I know you. You work at Benzinga.
Holy shit. Plot twist. So Tay Lisa is pointing out ATH could be in a Wyckoff distribution structure. So
let's definitely take a look at that. In fact, my previous notes on ATH, I was trying to map it to a Wyckoff. Guys, give me a 1 in chat if you're familiar with Wyckoff, the person and their teachings in technical analysis. 1 for Wyckoff. It's the spelling's right here. And if you don't know, check it out. Distribution and accumulation. Very, very, very core to a lot of my trading style, which is finding stuff that's absolutely at the bottom so I can get it at the beginning of trends. That's how you do it, is understanding that Wyckoff structure. So we're getting Noob with a 1. Michael's a little bit new to it. Dev knows it. World Target Domains, hosting and web services, free advertising, knows it. Tubby Ninja Elite knows it. Shelly knew. Leah knew. Chris knows. Of course, Dog with the Tupe knows. And we're pumping a little American Airlines. All right, so I want to look at ATH. So the Qs, here's what I think. Break above this range right here, you can target the upper range. Options are, of course, going to be expensive because it's the freaking Qs. And there's already a lot of upper volatility. Best time to buy options would have been right here, depending on how you trade them. For me, this would have been a fat in the money option expiring like a weekly, because that's just how I do these days, in and out. But we're looking for either do or die here at 363-ish, which is based on this previous resistance level and this resistance level. If we can't break it, look for the pullback. Will Taylor, I don't know Molly personally, but definitely it's up to Molly. Unless that's a reference I don't understand. So there you go, Marco. Ooh.
Yeah, I think Molly's something the kids are smoking these days.
Oh, yeah, I never heard of it. Dude, can you hit like an applause thing? Do we have like a laugh track? Why cough? Aaron Bree.
Oh.
T, you're brilliant. That's that. Hey, that is the English public schooling system at work. No American would be capable of coming up with that.
I didn't even get
Thanks,
it. Let
Biden.
alone come up with it.
Brilliant. Our chat is so brilliant in so many ways. Okay, here's the best thing about Get Technical Chat. Number 1, best jokes out of all of them. Number 2, best stock picks out of all of them. Number 3, best looking, objectively the most attractive physically of all the Benzinga shows, and arguably every show on YouTube. You guys impress me all the time. I like to think that I've contributed to your success in your life in some way. So in a sense, I know you're thinking it, so I'll just say it. You're welcome.
Oh, Microvision's ripping, Don says.
All the old. So let's get to AHT so I can talk about it. So on the daily, so the Wyckoff structure would be taking place over this longer time frame. And for the folks that are not familiar with the Wyckoff, damn, it's up 20% today. Shit, son. Ooh, that's looking like a snack.
I got so confused when I looked at the stock price because I was like, holy shit, the stock's at $20, but then I forgot they had the reverse stock split.
Oh, they did? AHD?
Yep.
When?
Last week, I want to say.
Oh, the splits right here. Yeah. Ooh, I wish I would. I was not up on AHD. Growth names are coming back, says VioNoob. AHD is not a growth name.
No, it's a REIT.
It's a commercial real estate REIT. But it's a 100% total FinTwit meme stock. Like Reddit's got meme stock, so does FinTwit. And I think that FinTwit, while there are FinTwit, while there are probably fewer than there are in like the subreddit communities, they all have more money. Miles is calling out not healthy. That's a split. Yeah, but Miles, I think we're using this more as a pedagogical stock to look at the potential Wyckoff structure, which can fail. 13, get out of here with that.
A little Freudian slip.
Will, stop it. Producer AB, make sure Will Taylor gets a free mug, a Get Technical mug. We'll tailor. Make sure you just email powerhour@benzinga.com. Aaron Bree will get you a mug probably in about a month and a half based on his current success rate with getting swag out. But we'll get you. we love him though. We'll get you a Get Technical mug. You're randomly selected. Okay, so AHT. Let's just check out the Wyckoff thing. That joke T was God, you had me wheezing with that one. So stockcharts.com has a great, is it this one? So here's a picture of Wyckoff. Good looking guy. This is something that you guys should all be looking for in every single asset you invest in, because every single asset falls into this basic pattern. You're all looking at it. All right. And on this show, when you guys hear me talking about fat, juicy bottoms, it's not just because I'm thirsty. All right. It's because I am always looking to get in at the beginning of a markup phase, which is a sustained upward trend. Now, keep this in mind, and we're looking at this distribution, this overbought, which actually is measured by a tool called the RSI, Relative Strength Indicator. I am a master of buying the markdown phase. Give me a 1 in chat if you've ever gotten in too late on the markup phase and you were actually buying at the top when it was overbought and rode a markdown before you got out and you lost some money. But yeah, give me a 1 if you are ever done this. I've done it. I've done it. But we want to get in. We want to find stuff that's in the accumulation area early and then get in there. This is what we call a rat snack. This is what we call the stuff that was getting sold off, and then only the rats are coming in to get it, and the hedge funds that know something. And that's what ultimately drives that price up. Lots of ones coming in. All my bag holders, all my sweet bag holders. I own many times. I don't even know how many zeros that is. Shay, always with the so Shay, you must be a poet because you utilize repetition to great effect. In chat, BT. So we got AHT. What was the other one we wanted? Oh, is MViz. So let's hit MViz and let's hit BT. So MViz. Okay, let's look. Okay, remember this thing. Keep this thing in your brain. See this accumulation here?
I seen it. I see it.
Good. Getting to the top. And then
Sloppy,
MViz, sloppy. MViz got whipped. But it just created great trading. So MViz is a much smaller stock. What I will say is this pattern is just a rough outline with a ton of zigzaggy stuff happening inside it. But you'll see larger stocks, like if you want to look at like index ETFs, they will look more like this because they have so many market participants and so much money going into them that it creates a smoother overall price structure. But with fewer market participants and a lower price, you have more volatility and you have a rougher overall price structure like you have on MViz, which is just MViz has been sweet. Give me a 1 in chat if you're an OG from the show. Buy low. Yeah, John Moore. I think that we just discovered the concept of buying low and selling high. Give me a 1 if you're an OG from the show when we first started talking about MViz. Back before producer AB started shaving.
I remember those days like they were yesterday.
Back when Ricky Gutierrez used to hang out with us.
Oh yeah, what happened to that guy?
We gotta hit him up. He just keeps posting pictures of him with new cars, and I'm like, I'm not cool enough.
Yeah.
So we got some OGs that were with us back when we talked about MViz. So Solar Up is asking, what do you set your RSI for? 80-20 or 70-30? I just keep it at 70-30, which is the default. So let's open this up. So by this guide, that would mean that something is overbought when it breaks above 70, and oversold when it breaks above or below 30. And I just use that because it's more universally applicable. When you're looking at different stocks and ETFs that you plan to study and set up really good trades for, you should be treating everyone like it's a different person. You need to familiarize yourself with the stock's behavior. Look back at historic sell-offs and the threshold on the RSI that it had to hit before it sold off. So I can tell you that like if you're looking at your indexes, usually a little bit more sensitive. You know, usually a little bit more sensitive. But then when you're looking at certain stocks, a little more volatile, a little more. Or I got that backwards. But you get it, right? It matters by it depends on the asset. So we were on MVIS. Now the question is with MVIS, are we in play right now? On the daily, we're not tremendously. I mean, this is looking like it could be a nice little bounce. So let me delete my everything, and then just look at the trend. And for this, I'm going to use a tool called linear regression. Statisticians, put your statistician hats on. This one is for our friend, your local dog with a toupee. Make sure if you have a local dog with a toupee, give them a pat on the head every time you use your linear regression tool. So where is that? Did I take it off my normal anchored view? Okay, so I'm just going to go to my indicators and do linear regression. Is that how it? Yeah. So I'm just going to use a linear regression. This is really just some basic statistics. You can do this in Excel with price points. E-Trade's default is 80-20. Aggressive. I traded MVIS. You sold them at $2. 13. Well
That's
played.
some OG MVIS.
Some OG MVIS, yeah. He's always on the OG side. But look at this. The linear regression itself is already pulling up a pattern here. We're getting down to this mean on the linear regression. And what historically has happened is that we get a pop along the way. So is MVIS still a possibility? Yes. Do we want to see above average volume? Of course. So you're watching volume. You're watching for continuation of what looks like a nice V-shaped reversal pattern. And then that's the week. So let's go down to the day. And it's really looking like it. It's really looking like it, guys. The price structure you're looking for here is down, up, shelf, up, shelf. Looks like we got the first leg up, so probably going to get some consolidation around either this level or this level. But that is enough beloviation from me. We do have a very, very special guest today to talk about market structure, Mr. Tim Quast. Hello, sir.
How are you, Neil? Thank you for that introduction. I feel some pressure. I've got to live up to that. Good to see you.
Trust me, you will. No pressure here. So if there's one thing I can tell you about the viewers of the show, low expectations.
Well, then this is perfect for me.
So Tim, would you mind giving folks an idea of what your specialty is? Like how do you look at the markets and like how is it unique?
Right. And I'm glad that you mentioned that because I'm not a technician. And of course, this is a show about technicals. You are, fortunately. So you can. Can I tell you something really quick before you go into it? What you do, I consider part of technicals. So how so? Let's discuss that. By the way, market structure.
Yeah, the participants in the market make up technicals and cycles. Like in my modern opinion, make up technicals. Okay. Whereas the thing that I'm not concerned about is a company's balance sheet.
Right.
And as long as we're counting that out and looking at simply what is happening, not what may happen,
Right.
That's where I'm looking at technicals.
Okay.
This is the Neil Hamilton get technical definition. I think that your market structure and you might talk to a fundy like Luke, and he totally thinks that fits into the other side.
Right.
But the structure of the market, the way it behaves, and how those constituents participate is, to me, all technical. But I cut you off.
That's
hopefully,
good.
hopefully that foreshadows, guys, what Tim's about to say. So how is what you look at unique, and what exactly is it?
It's unique in the sense that we take into consideration, in fact, the entire thesis, the math, the data science is all about the rules that govern how the market works. And I would liken it to gravity. You know, there are principles here on this planet that make it difficult but not impossible to leave it. And I'm glad to see that both Virgin Galactic and Blue Origin were successful in doing that. But of course, to be successful in reaching orbit or just going into space like Jeff Bezos did requires understanding physics. And how are you going to work within the gravity and the other rules of physics that affect this planet so that you can take advantage of them and do things like that? Well, it's a great analogy to how we think about market structure. There is a regulation that arose from congressional legislation all the way back in 1975 called the National Market System Amendments. Section 11A was added to the Securities Act. If you're starting to fall asleep, stay with me because this is very important. It gets to how exchanges do what they do, how their order types function. The reason your trade, if you enter a marketable trade for less than 100 shares, it will absolutely be executed because it's the law. But this is called Reg NMS. So Reg NMS is the gravity of the stock market. It determines how quotes are offered to the marketplace. Why do you have to quote in pennies? And why can trades occur in tenths of pennies? I mean, we should know that, right? That if you're going to, if you're going to be a doctor, you're going to have to understand and study medicine. If you're going to be a lawyer, you have to know the law. Well, if we're going to participate in the equity market, the U.S. stock market, it's wise for us to understand how it works, because what if we can turn it to our advantage? And so that is the whole basis. I think of it as supply and demand. There are two principles that we apply in market structure analytics at Market Structure Edge. So it's marketstructureedge.com. It's the only decision support platform for active traders predicated on these rules. That there is supply. You know, where does it come from? Why is it that you can trade about 100 shares of almost anything? Well, it's not accidental. It is a product of rules. It's the desire of Congress to create a national market system because it was considered a vital national interest. And then the regulators said, well, we need a continuous auction market, meaning rather than an art auction where you first have to put up a piece of art and then people who are qualified to buy that art get to bid on it and somebody wins, we today in the stock market have a continuous auction. There is always buying and selling occurring. Well, what if there's no supply? Well, all these things you should think about them. And supply and demand are measurable. Market structure sentiment is an algorithm that gives us the demand side of the equation. And then short volume, artificial supply, is the supply side. And so we want to buy rising demand and flat or falling supply. And we want to sell falling demand and rising supply because there's a very high probability that the gains lie in the first part and the losses lie in the second. And we want to, now if you're short, that's what you want to short. You want to short stuff with falling demand and rising supply. And it's very easy to find these things in the market. And what makes it possible are the rules. So that, Neil, is a long-winded, because I've never been accused of being brief, the answer to your question.
Well, Tim, that and the way that you describe that as supply and demand, I mean, that to me is textbook technical stuff. Yep. And that's why I think that what you're doing is new, is making more data available to someone like me to help me make decisions. Is this momentum in price action in confluence with the supply and demand based on the market structure data that is available. And that's where I think like what you're doing is sort of becoming a new essential in the toolkit for technical analysis. So I'm really excited.
I appreciate that. Thank you.
So just send my free account to neil@benzinga.com. I'm really excited for you to share exactly how you do that. Like my dream is to have like your information next to a chart, and then I would love to trade that way. So that's a brave new future perhaps we can imagine. So let's go ahead. It's just like Zoom. If you want to go to the bottom and go to share your screen.
Yeah, sure can. And maybe just before we do that, let's talk briefly about what you have on your screen, because I think that that's an important thing to understand. So this is the way traders, this is how we think about the market. And it's very much like a grocery store. The stock market is a grocery store, and it stocks products that you can go in and buy. There in a grocery store, there are different kinds of consumers. What kind of consumer is likely to come after 5 p.m.? People who work. Who's going to come in the middle of the day? People who don't work, maybe older people. The demographics will be different at different points in time and during, in the day. And they may consume different things. Well, the stock market's the same way. It's not just driven by one behavior. Clearly, there are at least two, right? There are traders and investors, people who have a long-term horizon and people who have a short-term horizon. But it's even more than that. We think of it as having four components. There are those who want the unique characteristics of something. What makes a stock better than somebody else? That is active investment. It's trying to find things that are better than average. Then you have passive money, BlackRock, Vanguard, State Street. Between them, $20 trillion of assets under management. They own 25% of all U.S. equities. And they are the exact opposite of stock pickers. Stock pickers want things that are better than the average. Passive money wants things that are the average. What passive money loathes is stuff that diverges from the mean. They want to track a measure. Well, all this feeds into the model. Then you got fast traders. 53% of the market are people who are trading machines that don't want to own anything at the end of the day. That can be very challenging for you and I as traders. What if we're buying momentum, but the momentum is being created by parties that don't want to be there at the close? Well, that can be a trouble for us. We can measure that. We can know. And then risk management, that's what's been driving the market. Options expired Thursday and Friday of last week, and the market began to go down. Sentiment was down. We could see a drop in demand for derivatives. Monday, new options traded. And what happened? The market plunged. Well, what will happen if there's weaker demand for risk management? Stocks will decline. Then you sort it out on Tuesday when the counterparties true up their books, and back up it went. Today is VIX expirations. Volatility as an asset class expires and resets. And tomorrow we're back to reality. But to try to explain what happened in the last few days in terms of COVID fears or economic concerns or interest rate and currency fluctuate, that's not what was going on. That's what was going on. People were resetting their hedges. Okay, so I'm going to share my desktop, and let's go to, you were talking about microvision. So maybe that's a place to start, where it's a great way to compare classic technical signals with market structure. So I'm going to go over here to imagine this, the Benzinga Get Technical July 21 portfolio that I've created.
There you go.
Yeah,
Yes, by the way, Tim, this is producer Aaron here. I was the one emailing with you. I'm just going to hop in. Neil's got to run.
Okay.
Thanks, Tim. Tim, it was really good to see you. Guys that are watching right now, you are in great hands, and you're going to learn something if you haven't seen this already. Although I do see some people in chat that use Market Structure Edge already.
Awesome.
Awesome.
It's the Edge Mob. The Edge Mob is a rapidly growing group. Yes.
Are you sticking with that? Is that the official marketing?
The Edge Mob. I don't know. I haven't asked if they're comfortable. I'm going to have to ask. If Edge Mob is the kind of not name that they want to have. But
yeah,
good to see you, Neil.
I love it. It's great to see you too, Tim.
I'll see you Saturday, right? I'm gonna
do Saturday. That's what I do my thing. Everyone, this Saturday, go to benzingabootcamp.com for a full day of education featuring Tim, me, Luke Jacoby, Mark Putrino, a whole bunch of really, really smart people teaching you the basics to the advanced stuff. Anne Marie Band is back. So if you guys know Anne-Marie Band, she will be back talking about some serious intraday trading methods using both options and stocks. But you guys are in great hands to learn about this whole market structure thing and how I think that this is a new standard for anyone that's going to be active in the market. So thanks, Tim. Thanks, chat. Thank you, AB. I'll catch you guys later.
See you.
Yep. Smash the like if you're here from Edge Mob, and let us know in the chat that you're here from Edge Mob.
Right.
Real quick, Tim, before we get
Yes,
to
sir.
microvision. So you mentioned wanting to identify if you see something that has decreasing demand but increasing supply.
Right.
So where do we see this? Does the increase in supply, does that come strictly from companies doing offerings, or can you explain that real quick?
Sure. So we might even have an example here that we could use. So Shopify, it actually is a stock that I traded. I only trade during options expirations. I am very careful. If high frequency traders are careful, I'm going to be careful. But here's Shopify. So how we look for increasing supply and decreasing demand is we'll look at so market structure sentiment, and let me scroll up a little bit just so you can see the top of the column. Market structure sentiment is our demand measure. It's a 10-point scale that takes into account the 4 big reasons that people trade or invest in stocks. I mentioned active investment, that's stock picking. Passive investment, that is investment following a model like BlackRock, Vanguard, State Street. Fast trading, that'll be Citadel, Two Sigma, Virtu, Quant Lab, Hudson River Trading, Infinium, Jane Street, GTS, firms you've probably never even heard of, but they're responsible for more than half of all market volume. And then risk management, which is a trade tied to a derivative. So it's the counterparty motivation. We're going to take the movement of those behaviors, which we reach by sorting trade executions according to Reg and MS. What do you have to do if you're going to execute a trade in the market? That is mathematically measurable. So we buy trade execution data and we assess it with our software, which we've done for 16 years. We're very good at this. And then that will tell us whether supply or demand is increasing. So if you're 1, then you're all the way at the bottom of the scale. And now we're looking for rising demand because demand has come all the way down. If you're a 10, you're at the very top of the scale for demand, and demand will it decrease at some point? I'll give you a couple of examples. So if we back to Shopify, we can just look across here in our portfolio and see that it's 4.2 and the trend is down. So it was higher and now it's falling. 48% of Shopify volume is coming from borrowed stock. That's supply. To explain that very briefly, I don't want to consume a lot of time, but I think it's a very important concept. We measure short volume every day, everywhere, and everything because FINRA, the regulatory body for brokers, there are 3,700 brokers in the US market regulated by FINRA. Every dollar has to pass through a regulated broker or dealer into or out of the market. That's the law. And they require 86 different data points to be reported to them within 10 seconds of a trade. And one of those are the shares that you or your customer have in this transaction owned by you or your customer, or are they borrowed or created? Brokers can create stock to fill orders. They're exempt from the short locate rules. That's a concession the regulators made for market makers so that they could make a continuous auction. How are you going to offer 100 shares to sell and bid on 100 shares to buy all the time and everything without being exempt from the short locate rules? That's what they said to the SEC, and the SEC said, all right, we'll exempt you. So we look at those things, see Shopify is down. You don't want to buy falling sentiment. It doesn't mean that there isn't the occasional exception to it, but why would you buy falling sentiment? It's telling you that demand is diminishing. And so if short volume is rising at the same time, that's trouble. Well, let's go look at it. You and I will find out at the same time here. But I bought and sold it yesterday because I'll tell you why. So here's the dark last price, and then here's the lighter line is sentiment. Price is volatile. Trading price is very difficult. Price is a consequence, not a metric to me. Price and volume are consequences of things that are occurring, and they're very unstable. The entire market moves more than 2% intraday on average. Every stock. Energy stocks moved 5.8% intraday from intraday high and low on average in the last week. very, very difficult unless you're a high-speed machine. So sentiment takes that risk out by saying you want to buy rising sentiment. Notice this, when sentiment was rising, that it gave you predictably rising price. And when sentiment peaked and short volume, the supply rose above the trend, well, that's when you leave. If demand has peaked and supply is increasing, we'll leave, because the likelihood that there are additional increases in price are very small. And you can say, well, then I missed this little bump up here, but you also missed the swale. Now, why would I buy Shopify at 5? Well, 5 is a stable, it just tells me there's equilibrium between supply and demand. 5 is the fulcrum. You know, the prices rise when it's above 5 generally. Prices fall when it declines below 5. Well, it has, you know, before the market opened today, sentiment fell, even though price was up very nicely yesterday. Short volume still right at or just a hair below trend. It's not bad, but I know that the likelihood of additional returns are very low. And during options expirations, I'm very careful because the market does unexpected things. Why? Because prices are being set by things you can't see. It's not the equity, it is the derivative during options expirations. And there are, I'm not making it up, $600 trillion of notional value in derivatives, according to the Bank for International Settlements. Now, not all of that ties to the US equity market, but the point is that is 8 or 9 times total global GDP. So you can think about GDP being levered 8 to 9 times, and all that leverage gets reset. Well, why would you put yourself at risk in the middle of that? So I'm not going to be there long. I traded 2 things yesterday, Tesla and Shopify, and I took my very nice 2% daily gains. That's a great gain, very low risk. But if sentiment falls, and here we don't have rising supply, but that's what I'd look for. I'd look for falling sentiment, rising short volume, and that will tell me that there's a very high mathematical probability that stuff declines, all other things being equal. And so that's how you think about it. So maybe, Aaron, let's go look at MVIS in that context.
Let's do it, yeah. And
okay.
I'm curious, okay, so we see that the market sentiment is 1.8 for microvision.
Right.
So that would mean that it's dropped, the market sentiment has dropped significantly from after this price movement, or help me understand that.
Right, it's not great data. It's not great data, and here's why. If it's 1.8 and topped, it means it's spent 2 or more days at 1.8. Well, you want to own stuff above 5. You know, you want to buy stuff that's right generally. You can buy ones, you could buy an uptick. Buying ones, you don't know which direction it's going to go, but you can do that. I'll show you that too. So 1.8 is not great. It's well below 5. If 5 is the nexus of supply and demand, and MVIS is at 1.8, then unless the trend is rising, it's not great. So, and the trend is not rising, it's topped. What topped means is it stayed at the same level. So if a trend up means the number today is higher than the number it was yesterday. If the trend is down, then the number is lower than it was yesterday. If it's topped, it's the same. If it's bottomed, it's the same. It's just which direction things are going. So we look at MVIS here, 1.8 top, 34% short. It's not very short. I mean, that's one good thing. There's not excess supply. The whole market at any given point is around 43 to 45% short. There is no supply. Almost all the stocks in the equity market are fully owned. So where does supply come from? It's borrowed stock. Almost all buy orders are filled with borrowed stock. And then the ledger gets leveled out over the coming days. Brokers have T plus 36 days to square the books. And they'll do that. But it could be something else of equal value. It gets very complicated, but just keep this very simple thing in mind. We want demand, market structure sentiment, and supply, short volume. Trades about $1,800 per trade. If you try to buy $3,000 of this at a time, you're going to move the entire market. I always try to buy that amount or less per trade. So if it's $14, $14.50, how much can I buy? 100 shares, right? A little over 100 shares. Don't try to buy 2. You're going to move the market. The machines will know. They're going to game you. So it's good to know. Fast traders, the machines are the lead behavior. So that's not predictive. It just it's informative. Now you know who is leading. So now let's go look at the data and see what it tells us. Look at that. So over the 30-day default period, back here when it was 10, you know, you wanted to be in MVIS when it was rising toward 10. And you want to leave when sentiment, somewhere in there. I would leave when short volume's above trend. You could stay all the way to mean reversion, which is back to 5. And notice that everybody covered here. You know, all the market makers covered right at options expirations in June. That's when you do it, because maybe you can use options instead of actual stock to cover your short. But look where it's been since. No demand. There's a little bump in demand, but short volume's above trend. That's not great. You know, if you're running, even though the chart looks good, here's putting classic technical factors together with market structure. I would look at that and say, well, that's not great. Let's back up. I like to look at 3 months. We default to 30 days because the market is very short term. So what would you want to buy? You would want to buy rising demand and falling supply. The trend line in short volume was down, continues to be down. But we need demand to improve markedly before this is a good trade. This is where you made money. Buy that rising demand, short volume below trend, and when it peaks and short volume jumps above trend, get out. That's how you capture the gains. And look how well you would have done. You could have bought somewhere in here, let's call it 14, and it went all the way to 22. Wow, huge return. And you could get that in a matter of days. That's what you want to do. And it's very difficult to get that from a classic chart. Now, maybe the chart would tell you something about an entry point. It's difficult to find a good exit point in a chart because you don't know when it's going to come down. And some of you who are very expert at technicals may say, well, I beg to differ, Quast, we can do it. But that's how to use it. You want the best probabilities that you can get. You know, the market is very mathematical, and to the degree that we can stack the deck to our advantage, that's what we want to do. There's no perfect system. Nothing works flawlessly. But it's a line I used on the Benzinga pre-market prep show on Market Structure Monday. It's like Winston Churchill described democracy. It's the worst form of government in the world, except for all the others. Market structure to me is like that. It's not perfect, but it's a great way to reduce your risk and increase the probability that you're going to be successful.
So, yeah, I mean, I think it's very interesting kind of when you're looking at the short interest in this context, because I know obviously with the last 6 months or so, we have a lot of people that are more interested in looking at short data and low floats because they've seen what can happen with short squeeze. But where you're looking at the short data is maybe a little bit different than in that sense, correct?
It is. It's not short interest. It's very important that, once again, you know, being a well-educated participant in the market to me is important. If you're going to do something, make sure that you know as much about it as possible. I only know market structure. I don't know anything else really. Just kidding. But the short interest, which everybody uses, is a 1974 measure. That's important to understand. The SEC did not create it. The Federal Reserve did. We abandoned the gold standard in 1971 because we were creating more dollars, but not increasing the underlying supply of gold in which it was redeemable. The gold pile was shrinking. The amount of dollars in circulation was increasing. So the government cut the tether between them. Financial asset volatility exploded. People started hedging. They started using margin. And the Fed said, whoa, everybody out of the pool. You brokers, you need to report to us the use of margin accounts. And that became the short interest report. 2 times a month, you would report your margin account usage, and it was, they set the standards then that you could leverage 50% of the value of your account. That has unchanged since 1974. Think of all the things that have happened. There was not even a single electronic equity market until 1986. That's when the Cincinnati Stock Exchange became the market's first all-electronic market. Today, the whole market is 100% electronic. Over 95% of trades occur on algorithms. You hit a buy or sell order at your online broker, they're using an algorithm. All right, that's what they're doing. It'll go to their own ATS, alternative trading system, or to somebody else's. It's not going to go to the NYSE or the NASDAQ. Never. I've got, in the last year, I've had 3 trades go to an exchange, and I'm going somewhere, Aaron. I won't lose my train of thought. And it's because of these rules. So somehow, because of 1974's rule, we're still using it in 2021 to understand shorting. It's a horrible measure. It doesn't reflect how the market works today. Short volume is the amount of trading volume. How much of something is coming from borrowed stock? Well, short interest measures the amount of float or total shares outstanding that has been sold and not yet covered. Well, the total shares outstanding of everything never trades. It's over 90% owned. So only a small part of shares outstanding actually trades. Well, wouldn't it be helpful to know how much of that is short? And it's predictive. We're data analysts. We're data scientists. We study data.
Right.
We can find no predictive correlation between short interest and how stocks behave in the near term. It's not even the reason meme stocks occurred. It is a false correlation. They settled on that. The only thing that causes meme stocks is a surge in buying demand. It has nothing to do with short interest. Sophisticated hedge funds that are short stocks will simply, the moment it moves 5%, they swap their risk to Goldman Sachs. And now Goldman Sachs will hedge it for a fee. Unsophisticated hedge funds like Melvin Capital will get squeezed and hurt and become dependent on other hedge funds. But it's not short interest. It's the fact that if there's a surge in demand, brokers are required by law to fill it. So they'll create as much stock as necessary. This is how stocks like NVDA was one of them. Traded several times its own total shares outstanding. How's that even possible? Well, because shares are created. So we've tracked short volume. That's what matters.
Got it. Yeah, I mean, that's very interesting insight there. That's super helpful. I'm sure a lot of traders out there that are kind of newer to the markets that have been hearing about short interest and short squeezes might not know all that info.
Exactly.
So we might need to get that clipped out and make sure that we have that info because as you said, we can use this information to kind of make more informed decisions. Nothing's 100% guaranteed or predictive, but this information can allow us to make better decisions in the market.
Probabilities. It's all probabilities. And all you need is to be, if you're 51% right, you will be successful. We want it in the 80s, 83% right. You do that time in, time out, you will be very successful.
Awesome. Well, we are coming up on 2 o'clock.
Okay.
But Tim, it was great to have you on Get Technical. I know next week we'll have you on pre-market prep on Monday. We'll also do a power hour on Wednesday, and then the following week we'll be back on Get Technical. So super excited to get some more insights from you. Very informative, and yeah, enjoy the rest of your day. Thank you for taking time to join us.
I'll look forward to it, and we'll continue to show folks how to make good use of the rules that govern the way stocks trade. Thanks, Aaron.
Beautiful. No problem. All right, y'all. Stick around. We've got Moon or Bust coming up, and yeah, we'll talk to you soon, Tim.
Okay. See ya.